Good morning, everyone, and welcome to the morning brief to Thursday, June 18th. Let's give a quick update, first of all, on the podcast. Have the fifth episode coming out today. It's out to all of the different podcast places, there's like 20 of them. It's kind of interesting how these things propagate out. But in case you're wondering how that works, so I go through a centralized thing called Libsyn, which is something synchronized deal. So I upload it in one location for this paid service, and then it shotguns it out to Apple, Spotify, iHeartRadio, basically however anybody consumes content. So it's pretty interesting. And I get back from this platform that I use, I get back feedback as to which of those platforms is actually, people are watching and subscribing and all that stuff. So it's kind of fascinating behind the scenes. But so far, after the podcast really only being live for about 36 hours after I put all those episodes out yesterday, I've already got 100 downloads. So that's pretty cool. So anyhow, tracking right along. Also for Facebook advertising, I just approved my Facebook ad for tomorrow that's going to start running. And again, that'll just continue to run on a weekly basis as well to kind of get the word out. That's going to get the word out to the podcast. And then, of course, that'll trickle down into the room as more people listen and then will either want to participate or not in the morning room. Also, so in addition to that, and then tomorrow, and I know Predator, you and I have talked about this, I'm reaching out to some pilot groups as well as some other groups out there that might have time in the mornings, being on a different schedule. So there's different forums out there, different Facebook pages that I'm going to get to and basically kind of throw out what we've got going on here to hopefully get some more people. So that's going to be a push that I'm going to do early evening tonight to hopefully get some new faces in the room this morning. And we do have a few folks on vacation, but I can see that they're watching the replay. So that's pretty cool. Thanks for staying up to date, everybody. Okay, so here's our flow for today. Our mission objectives: we're going to grow our money, protect our money, and live off our money. Our topics today are how to invest in the home builders. We talked about Lennar beating earnings yesterday, and we kind of watched them. And then I also want to talk about raising your credit score. That's not something everybody knows about, but I do want to throw that out there, and maybe that'll get some clicks off the YouTube channel. When people see that, it's like, okay, maybe I'll check this out. So our flow is going to be long, short, open, short, long. We will market review, go around the world, and then talk about our headline review. Obviously, the big number this morning is unemployment, and I'm kind of surprised the futures aren't down a little bit more off of that. But those are the specific 6 names that we will talk about for the home builders out there, including the ETF. We'll get into day trading right around the open, then we'll go off into a Q&A. For contingency, Steve at ototnow.com is where you need to go, and there's our standard disclaimer. This is an educational presentation. More information available at otot.now.com. All right, let's go to TD Ameritrade and look where we've been for the past year. Focusing today right on that very end part and the congestion we've had there between the 300 up to 325 level. So you can see the trend lines are still up. I do expect today to be kind of a down day. There's several things in play, as we kind of think of this going into the weekend. We have, the bad jobs number today. Remember, the jobs number comes out, the unemployment listing comes out the unemployment filing number comes out on Thursday, and then you get the official unemployment numbers a day later, which is tomorrow. So expect that to probably be bad as well, or worse than projected, if you will. And then we have our social unrest going on, but we have Juneteenth is our tomorrow for June 19th, and everything that represents, as well as the Trump rally on Saturday in Tulsa. I think there's potential for obviously some very bad headlines to come out of that if that turns, either a mass peaceful protest would be interesting, and then of course obviously if it cooks off into some violence there. Who knows? And then you have the whole coronavirus crowd talking about how the rally is a bad idea to get everybody, together, that many people, and they kind of have a point. So I don't know. It could be kind of the volatility could increase, and it could be an interesting weekend. So, and weekends tend in the financial world start on Thursday because half the business is off on Friday anyway. So we could see that move priced in today. So I do expect today to be in the red as far as looking at our chart. I do think we hold the 300 level. That would be a pretty significant move down. So I think we'll stay in this channel, but I don't really expect anything too positive coming out of today. All right, let's go to the next chart and look at the last few days in the SPY. Right, so you can see we had that big move up on what was that, a Monday, and then kind of trickled off from there. So we shall see where today goes. I'll go over the calendar for earnings out this morning. Looking at my notes, we had Kroger hit earnings this morning. They beat earnings. Carnival Cruise Line, you see there, is short off of the, that would be a short today off of their earnings that came in. Obviously, they lost twice as much as they were projected to lose money anyway, and they of course lost. I think it was over $3 a share. Pretty eye-watering, but kind of everybody knows that's coming. So I don't know if that will be a trend that we can trade on today or not. All right, let's go to CNBC.com. We'll take a look at how the futures are doing. Pretty much down across the board. If you remember, the Dow broke its streak yesterday of 3 days up in the Dow, and it was down yesterday. The NASDAQ actually finished in the green yesterday, and we'll get to that here in a second. But pretty much, I think everything should be red across the board today, unless there's some good news. We have kind of been riding off of Chairman Powell's back-to-back days, testifying to Congress. I think he's saying all the right things, and he's building confidence, if you will, which is what you're looking for out of your leadership. Okay, over to Europe, you'll see red pretty much across the board, almost down 1%, as you can see there. Over into Asia, kind of some good news stories that you'll see it in the headlines about China. They think that they have that second wave under control of the coronavirus. So that had been a concern. So at least they're saying good news. Now, you always have to kind of take Chinese news with a little grain of salt here in the US because we've been burned, right? So you have a communist government giving this news report. So I don't know. I think it's probably the case, but you don't ever actually know if that's completely truthful. But you see Japan and Hong Kong are pretty much, they're down a little bit, but pretty much unchanged. Okay, looking at our numbers from yesterday, so I talked about the Dow was down, NASDAQ was up, and volatility over there increased yesterday. So I think we bottomed out around 32. We were up at, over 40. We were up at 43 last week or so. So I did write down in my notes a long BXX today. So we may look at trade and volatility long, and I think that's probably my favorite. So that's what I'm leaning towards, at least as we look at things right now. Okay, the bonds, not too much movement, but in the red there for the 10-year. Over to oil, continues to go up just a fractionally higher, over to, closing in on that $40 a share. It would be nice if we could get up there and stabilize. Nat gas, you heard me talk about UGAS yesterday, which was up. If you're looking at UGAS specifically, I'm a buyer below 10. So if it goes back below 10 today, I will buy some more. When it's above 10, good. I'm probably exiting around the 12 to 14 mark is the window that I have down for my target on that. Kind of a swing trade there, since I do plan it's probably going to take a couple weeks for it to get there. Okay, gold and silver are both off, but not anything of significance there. Okay, back to the main page. And for the headline review, obviously jobless claims are the ones that's going to catch your eye there. Let's see, for total numbers, again, coronavirus, 117,000 deceased from the disease right now. So there was a headline earlier about, more than we lost in World War II. So, okay, yeah, that's a bad headline, and projections out to 200,000 now as far as the total deaths. So we had, 100,000 kinds of the initial target. Now it's off to 200,000 as far as the projection. So we shall see. Okay, the unemployment benefits, obviously, this is maybe it's a last-ditch attempt for people to cash in on these. But again, those go away at the end of July, and there is likely going to be a second bill that comes out. It's been kind of out of the headlines, but I think everybody realizes there is probably going to be a second bill, and we'll see what happens with these unemployment benefits. And there's also talk of course, of incentivizing folks that are collecting these benefits, of paying them again to go back to work. Kind of reminds me of my days in the Air Force as a pilot and getting a pilot bonus. It's kind of like, okay, well, all right. I'll take the free money. Okay, let's see. Yep, there's the 600 to 400. You bet. Yeah, two new books out. The only one they talked about there is the John Bolton book. Supposedly, I haven't seen previews or anything, but it's pretty bad. There was also another book out by Trump's niece that carried some negative stories with that. So probably hear more about that. Trump was on Twitter. I'm on Twitter now, so at Steve Ankerstar. If anybody wants to follow me, or let me know that you're on Twitter so I can follow you, because I have one follower right now. So rocking social media there. But I do follow Elon Musk. I follow Trump. I follow um, Tim Cook from Apple. So it's kind of fun. But just to watch real time when Trump's tweeting, it's really pretty interesting. And I would say personally, it's not really a confidence builder. Actually, he really does seem to tweet like a teenager would tweet, the way he says things. So it's kind of interesting there. But he pushed back hard on Twitter about the book when it came out, full of lies, fake news, kind of the standard stuff. I don't know about buying Twitter. Okay, let's look on down. Let's see. Argentina, some bad news. It brings up an interesting point. For diversification, you're supposed to be diversified all over the world and maintain emerging markets exposure and international exposure. For everybody I've talked to for basically since I've been in business for about 7 years as a professional money manager, is I just don't have that stuff. There's just not enough good going on around the world for me to allocate money there, other than diversification, which can be diversification. If a sector's down, why are you going to go into it? But yeah, no good news out of South America, right? Okay, Spotify. They are being aggressive right now. You may saw last month they picked up Joe Rogan's podcast. If you don't know Joe Rogan I actually follow him on Twitter now too. Pretty interesting MMA kind of guy turned podcaster. Brings an interesting, pretty straightforward right-wing view to the world. So I enjoy listening to him. But the headline for Spotify last night was they're going to pick up Kim Kardashian West's podcast, which obviously brings a bunch of followers with their and shows some diversification. And of course, Kanye is her husband, so maybe a little more inclusive view there from Spotify. And then of course you see the narrative scripted podcasts. We'll see, right? But they are aggressive right now. Their stock is bouncing off an all-time high yesterday, so it's tough to stab at things that are at their all-time highs. But it's certainly they're on the move. So okay, let's see what else we have. That last bull is the last one I'll talk about, how to get back in the stock market if you sold when it was down. That is the hardest thing to do in the world, is you got to close your eyes and start feeding money back in. You just have to do it. And then next time the stock market goes down, stop hitting the fire sell everything button. So, all right, with that, let's go to the long-term themes. We're going to talk about home builders today. What I have for you in the home builders are some names you may or may not have heard. I have Meritage Homes in the upper left. I do consider that best of breed, and I will tell you why. Upper right's Toll Brothers. You might have heard of that. Lennar's middle left. We talked about those guys yesterday. DHI ticker is DR Horton. So you may or may not have heard of DR Horton, depending on what area of the country you're in. Bottom left is the Pulte Group. I don't know if it's Pulte or Pulte, but also another major one. And then the bottom right is the ETF. So if you just want to own the whole sector, this is one of those that I will tell you, I've picked a best of breed, but if anybody was coming off the street, I would say, hey, just buy the home builders if that's where you want your money. So why would you want to? First of all, what's the overall thesis in home building is, well, the increasing population, people need new homes, homes do get destroyed. Have a buddy that's in Scottsdale, Arizona, that happens to, his wife works at Meritage, so that's how I got turned on to the stock several years ago. But buying properties and basically demolishing everything that whatever the city code says, you have to leave one wall standing, for permit reasons, and then you build an entire new house around it. So hurricanes come through, other natural disasters, tornadoes, that sort of thing. So there's kind of always a new market for home builders. From a PE perspective, they always stay well, about half of the market. So you can think of the overall S&P 500, you're at about a 20 to 22 price to earnings ratio. Maybe 25 is the new normal. We tend to be hanging out there for the past couple of years now. But home builders, they're going to be right around 10. So they're kind of like the big industrial things. So if we do have the infrastructure bill that should put a bunch of money out soon. And, that sort of stuff, these things track a PE a lot lower of that 10 to 12, just because you don't have the high margins. So not my overall cup of tea, but I have been in Meritage Homes. I'm not in it currently, but if I had to pick one, that would be a Meritage Home. So why Meritage Homes? PE of 10, they do not pay a dividend. The other 4 companies do, and of course the ETF does, because it pays a collective dividend. So that's what you see a difference on the chart there. And I like companies that don't pay a dividend. And here's why. When you pay a dividend, that is simply a return of capital to the shareholders. And it also shows that a company does not have another use for that money. Otherwise, they would not pay a dividend. They would retain it, put it into R&D, technology, future growth, that sort of thing, and continue to expand. So I'm not saying that if you pay a dividend, you can't expand, because obviously a lot of companies out there pay dividends and huge dividends, but it is a straight expense off the balance sheet. So when you get in times like this, where we hit COVID-19 and we're talking balance sheet strength, paying a dividend is quite the liability. It really is. So that's enough on Meritage. All these charts look almost exactly the same, but Meritage they had a Home of the Future initiative, which is why I invested in them in the first place, which they're talking about, building this is back in Solar City days before Tesla gobbled them up, but building homes where the whole foundation of the home is actually a battery for electricity storage. They also were working with Amazon on several different functions of being able to have a drone come in and if you've seen the drones trying to navigate the front porch, it's kind of hilarious. Google drone delivery fails and you can crack up for 5 minutes. But this was think of a skylight where it had automatic, sensor detecting where the drone comes in through the skylight. Skylight knows it's there. It's got some matching code. It opens up the skylight. You go down and drop your package inside, into a skylight type thing. And then the drone leaves. Much easier for the drone to navigate. Then the opening closes, and then you can go retrieve your package at any point in time. So anyhow, pretty impressed with the leadership team, but I could be biased there because I do have a friend's wife that works there pretty high up. So anyhow, a lot of cool new initiatives. Toll Brothers, Lennar, the rest of them, I would consider them almost equals and wouldn't really touch many of them. And then of course the XHB, we talked about at the bottom. Overall, the XHB pays about a 1%. So a little less than the individual names. The other 4 all pay right around just north of 1%, and XHB pays a little less. So, but if you're a real estate type investor, this is a way to get exposure to the home building phase in the market. That the names I talk about generally are the suppliers, which is your Home Depot and Lowe's. So that's how I kind of like to play it. If you are concerned with all the money that we're spending as far as COVID relief and in general in this nation, since we are racking up some bills, if you're worried about inflation coming out of this, real estate's a pretty good place to be, because your home kind of tracks up with inflation. So, there's different things to look at. And then of course the work from home environment gives you that home improvement kind of push to where, if you're upgrading kitchens and bathrooms and stuff, that not only helps your stock price, but also that's another way to play the real estate thing. And of course, Home Depot and Lowe's are the primary benefactors to that. So, okay, enough on the long chart. Let's go over to the tabs and we'll look at some shorts out there. Again, with the overall market in the red, I'm going to refresh on another screen, see where we are. Okay, we're over 1% down in the Dow, so 270 points down in the Dow. So again, losses, it's going more into the red as we're talking. So again, that's setting up for the shorts. Let's take a look at KR, which is Kroger. That would be long on earnings. We'll just see what they have here. All right. So 32, they're actually down a little bit, so I wouldn't touch them. They're being pulled down by the market. They were a pre-market gapper, but they're not anymore. Okay, next one is CCL short, down around 7% earlier. Let's see what we have. This is basically a continued sell-off as well as the earnings whiff. So they closed at 1909. They're down at 18 right now. So that's probably, let's see, off on the right side, that's what down? Yeah, 7%. Exactly. So that's in the heart of the window. So that's kind of set up with a market that's in the red and likely to go more into the red. So that's exactly what we're looking for. Let's go Ford long. Ford was in the news for a lot of new initiatives. Now they're talking a big game, whether they can deliver or not. It's a F is the ticker, just straight F. The so we'll see if they're gapping at all, gapping down a little bit. So we wouldn't touch those, but they're in the news quite a bit. BP short, so a bit beyond petroleum there. Let's take a look at those. BP is a symbol. Obviously, they've laid off a ton of people. Their dividend is in question, and they just issued a whole bunch of new debt. So they're closed at 23.70, down at 23.40. So not much of a move down, but I think that is a clear short case. When you think sometimes in day trading, it's something that's just going to leak all day. You could short that at the open with a nice big stop and just let it leak all day long, because I don't know who's buying BP here. Yeah, people will say, yeah, we'll buy it for the dividend that is going to go away. I'm not making that call, but they are basically issuing debt to pay their dividend. So red flags, anybody? Spotify, we talked about SPOT. That would be a long case. They're also at their all-time highs yesterday, so we'll see if they're gapping up on the news. 199 up to 210. So quick math, what's that? 5% gap? Gap up. So yeah, that would certainly be there, and maybe a lot of money flowing into that. I don't know. We shall see. Okay, we also have our bankrupt crew. AMC would be a short. If you saw, they're trying to negotiate their way out of this, but it looks like they are going to go under if they can't find something soon. Not really gapping down too much, but that would be a slow leak over the day. Let's put Hertz up there, HTZ. Again, they just got a beat down from the SEC yesterday for issuing new shares when they're going bankrupt, and B, also sending out a message that if you buy these shares, they're likely worth zero. So I don't know, maybe time for some new blood in the PR department. But they closed at 2. They're down at 185, so that's a decent chunk. What's that, 6% down? So with negative headlines going into bankruptcy, Hertz short would be something definitely to take a look at. And the last one, Chesapeake. They're not this far down the road as the other two, but they're certainly trying to survive, and I don't think they're going to. So they're at 13, gapping down to 12, mid 12s. That's another name just on the thesis of that they're going under. So that stock has a lot of room to run to the downside. So let's look at the tabs. X United Steel down. I didn't catch that. That's probably earnings. Let's see, Carnival we talked about. Norwegians, yeah, that's a decent gap down. American. So Sonos, let's click on Sonos. I don't know what Sonos does. So I'm more curious than anything is necessarily wanting to short it here, and I'm not going to get any help. So if somebody has that, throw that in the chat. Otherwise, I'll move on. Let's go to the next tab. Okay, looking at the gainers here. On volume, In Phase Energy. Haven't heard of them. Put ENPH over on our left side there. Okay, nothing to go off as far as information. The next one down you see there, that's the Royalty Pharma. So that was the one that IPO'd at 28. It popped up to 46 and is still on the way up. I don't know if that's justified or not, but certainly you could IPO your dog right now, and I think it's going to go up. So kind of crazy. I'm not going to touch that or recommend it. Go a couple more down. That's Spotify. We've already talked about it. Doesn't have the volume, but it will by the open. Just remember, with a high share price, you really have to be careful, and you have to be able to think about setting a multi-dollar stop, like a $5 stop, instead of that, a $3 stop versus that, 10, 20, 30, 50 cents kind of thing. Okay, let's move over to the decliners. On volume, Biogen gapping down. That's one of the big 4 horsemen of biotech. I'm not going to touch that today. Let's look at Boeing coming in a couple of percent. Yeah, it's been kind of slow leaking down from, it got a little ahead of itself. I mean, come on, it went up darn near 100% from below 100 over to 210 or so. So it's coming in. I still think it's a fine long-term holding, not concerned. Okay, let's go to the gainers. All right, kind of looking through here. Thanks for Sonos Computer Electronics. That sounds good. All right. Seeing your note there, the only one we haven't talked about, Predator, is X. That's US Steel. Let's put that in. I think that was a huge gap down. Okay, $9 down to low 8s. So that's, yep, new share offering. Hey, speaking of new share offering, so DraftKings yesterday issues a bunch of new shares. I think the stock could get hit. No, craze continues. It was up. Just insane. Okay. All right, let's go to the next tab. There's one more thing I want to talk about before the open. All right, in-phase energy again, not going to touch that. Royalty Pharma, no. Mylon is kind of part of the envelope. I'm not going to talk about it. Data Nexus Limit. Okay, DADA. Let's take that. See what that is about. I don't know what that company is. And don't see it other than gapping up. Okay, let's go over to TD Ameritrade and set ourselves up. Actually, before you go to TD Ameritrade, pull up that article from Forbes about the trader. So if you didn't see this, kind of an interesting, read this article if you want to read about a true tragedy. I think Robinhood enabled this. I mean, really, it wasn't even a margin account, and somehow he tricked his system with his advanced options usage, which good on him if you can follow the math, and good on him for his desire to get investing. But yeah, I guess this is why don't let your kids do this in the basement, right? see what they're doing. I'm not saying he's living in the basement kind of guy, but yeah, $730,000 negative balance. Now, that could be, and they do talk about this at the end of the article, that sometimes you see a temporary balance like's being highlighted there while things are being settled. So like if a stock is down 40% and I buy some for you today, you look at your app and you're like, holy crap, I'm down 40%. No, the math has not caught up. Same thing if I bought you Nikola after it goes up 100, you can think you had a double and you're actually even, because it takes that overnight for it to figure out where the app is. So kind of crazy. And the kid took himself out. Obviously that's a tragedy, and there's probably some lessons learned here. So don't get carried away. Okay, let's go over to TD Ameritrade. We'll get set up. I need to get my trade typed in here. Let's go RCL on the left. I'm going to take the VXX long. And so let's put VXX in the middle. Oh, maybe not. I don't like the way that looks. I'm not going to do that. Let's put Hertz in the middle. Oh, I like that. That's setting up a little better. Put VXX off to the right. We'll just take a look at it and bring that down to a 1-minute chart while I figure out my stop here on Hertz. All right, let's see. This is going to be Hertz, HTZ short. Got a minute, plenty of time. HTZ short. Oh, I love that entry. Almost want to use a 5-cent stop. Let me go with an 8-cent stop. I'll crush my own math skills. No, I don't. I'll just do a 10-cent stop. And I will enter at the open and close at, let's see. I'll close at 15. I'm gonna let that thing cook. So I've got Hertz short 10 cents, enter at the open, and close at 15. So we can watch mine for the opening bell there. I love that entry. If you're going to take this in a paper trade or a real world trade, I am set up in TradeStation now, but I'm not ready to go. But I would take this as a real trade if it opens above 185 or so. And again, VXX would be long, so I kind of like that it's bouncing up there a little bit, but we shall see. All right, let's zoom in on HTZ. We're past the open. I didn't hear the bell. That's my bad. Looking off at another screen. So opened at 191. So you can, and I took it at the open, so you can draw my 191. I wimped out with a 10-cent stop, so my upper stop will be well off the chart. So that probably a lesson for me. 191 was the open there. So that'll be my mark, and I said I would hold that for 15 minutes. So we continue to watch that. Look at the VXX long. Ooh, that's bouncing around. I wouldn't have liked that big red bar. So that's probably one you would want to wait on. RCL, that's just short covering there. So that's a good sign as far as trading a short. So that might set up very nice for you. Okay, so for the Predator on RCL, he'll get the opening price of the next bar for being in at 2 minutes. And again, he's only going to be in that trade for 3 minutes. Like the way Hertz is acting. Let's check the overall market. Market's Dow's down 175, so didn't necessarily roll over at the open. NASDAQ's barely in the red, so we'll see. We'll see. Oh, beautiful entry. So let's give Predator the that's the lower open right there of that bar. There we go. 57.25 looks like. That's beautiful. That is a beautiful. Yep, and 20-cent stop, so up to 45. So basically top of the chart. So that's a great. That's literally everything you'd ask for in an entry. So as long as you survive the first minute here, I think you'll be good to go. All right, the VIX is interesting. That you know, and maybe that's why people don't trade the VIX, is it just moves so much. I mean, that's 25 cents there, and basically each of those bars is almost 25 cents. So that's kind of crazy. Okay, so let's put the SPY in off to the right, kind of see how the overall market's doing. There we go. So up a little bit. So it's kind of a good sign. All right. I still think, yeah, on that left chart on RCL, I think that's going to stripe down. I think that is going to be a great trade. I think Hertz will just be it'll be slow, but I think it'll continue to fade that whole time. So both of those should be winning trades. I'm not too worried about them right now. Let's take a look at some other stuff. On the right, let's go AMC. Remember, this was a short based off of bankruptcy news. So if you took it at the open, it held a 10-cent stop. So even if you took AMC at the open, it would have you'd still be in the trade. If you waited for a setup a little bit, then you'd be in the trade. That looks nice. So cross that off. Let's check out Chesapeake. Same thing, bankruptcy type of scenario. Oh, they're backing up pretty good. So 1260 up. Yeah, it's about 85 cents. So that would have busted out of any trade you tried to get on Chesapeake there, unless you weren't in it yet. Now, if you were looking at, what are we at, minute 4? Yeah, if you were patient and watching that, if that has another little bit of congestion up there around 1330 or 1315 or so, if it goes sideways a little bit, then that'd be a nice entry, because I don't see that one just making money today. All right, cross that off our list. Kroger long, let's take KR in that right screen. Okay, again, not much of a move there. That was off an earnings Earnings beat, so it's actually in the red for the day, 2% down overall for the day. So market's probably pulling that one down. So we don't need to look anymore at KR. I did throw out Ford long. Don't expect a big move, but they certainly are getting some press. It's so tough. I do think Ford's a little bit starting to get concerned. You know, they cut their dividend already. You've got a lot, money's flowing. There's money flow too here. So money in the car maker space is flowing into NKLA, the Nikola deal. Whether it's justified or not, that's hard to tell, but certainly money's flowing out of your legacy names, and that thing's starting to move down. Actually, that whole move there is only 7 cents range out of that chart, so it looks bigger than it actually is. But that's my take on Ford. Now, if they get to the point where they're healthy enough and the Mustang Mach-E and the self-driving functions and all that stuff towards middle of next year, if that starts going, then that's going to be a good thing. Okay, the Predator just closed there at 56. It's the opening of this bar, or actually the close of the last bar. So right there, what's that? 56.85. So a nice trade. Let's do some math. What was the entry point? 57.25. So my quick math tells me that is 40 cents. So that's a 2R trade. I'd hold that easily for the 3R. So if you're good with the pin there, you can draw 2R, or you can just put your check mark. I like it. Yeah, but nice trade, and kind of crazy it's backing up there. I still wouldn't worry about it though. Yeah, it'll take you 20 minutes to come up with the 2R, right? Okay, let's look off on the right side. You can abandon the 2R project. Spotify long SPOT. Let's see how Spotify's doing. Okay, again, it was bouncing off of new highs. So there's some people that bought it. Yeah, I wouldn't touch this as a trade, but also, it's probably, it's tough to hold your new highs. So I don't know. We'll see. All right, what else haven't we talked about from my notes? I think we got everything from my notes. Let's check the Predator's notes here. Let's see, CCL. Let's check that one out, see how it's acting. Zoom in a little bit on CCL there. It's down 5% on the day. So yeah, if you're patient on CCL and took a delayed entry, or just like RCL for the Predator, that 2-minute mark should turn out to be pretty good. RCL is backing up, and boom, would have been out of that trade if you had taken this real time. So that's one of those where had you held out for the 3R, I don't know. Let's see, the lowest of the day was 56.65, which is exactly 3R. So, maybe you made your 3R and got out of it at minute 5. But obviously you can see if you held past that, it popped up. If you were to trade all day, I don't mind that entry there either of reshorting RCL, but then you get into other issues. But that, I don't think it's going to hold up in the mid 57 range. I think they're going to get a nice big red stripe back out of that. So, all right, let's put the SPY on the right. Zoom in a little bit, so we'll keep an eye on that. And then we've got our green names up to the left. Let's go ahead and I saw you bring those up. So when you get a second, bring up our long names. See how the overall market is doing. Okay, a couple of options. Clickstream up there. NIO is the Chinese EV maker that's just been kind of on fire. Shopify, we see up there, up a couple percent. If you see in a down market, you're not going to get those big moves up. But several names are just barely in the green there. Let's look at the red. We probably have some significant red on the chart. Okay, big red, Shroom F. That is the psychedelic. You have UGAS, natural gas, selling off a little bit. It did pop yesterday, so we're still in the green there. LK, our fave, down 2% there. Lebanon Bank, Delta, Boeing. So really not a whole lot selling off hard there either. So The SPY, look at the SPY, a lot of buying right there. So the SPY's going up. It's impacting my trade. Let's see, I'm still in it though at 191. I've got all the way up to 201 on my 10-cent stop. Had I done my 5-cent stop though, you would see I would be back out. So even though I'm in the red on my trade right now, we shall see how that turns out. Okay, let's go back to the green there on the left. All right, and let's see, our topic of the day was raising your credit score. So let's talk about that a little bit, and then I'll take us over to Investopedia, but we'll leave it on the charts for right now. So credit score and why it's important. And this is not just for you, but this is also now thinking if you have kids that are getting, towards that in their high school age, off into maybe entering college kind of soon. That is when you should think about, you can co-sign a credit card if you're interested in taking that risk, right? Depending on the maturity of your child. But at some point in time, they should have their own credit card, if nothing more than to start the clock on their credit score, right? And they can, most people will advise, and if I put on my certified financial planner hat, I would say, unless you know your kid's a superstar, let's start with a card on their own with a $500 limit, and just be prepared, parents, to just bail them out of that if they don't handle it, and then take the card away, right? But we'll see. And give your kid an honest shot and tell them to use the card when they're off at college, and pay for things here and there, but they have to pay it off at the end of every month. Not going to the bank of parents all the time, but that will help them start that credit score, because that is one of the factors that is figured in. So all right, let's switch over to, we'll leave our trade in a minute. I'm red in mine, but we'll see. We'll come back to it in a minute. Let's go over to Investopedia page, and I'll pull up the credit score thing for you here. So again, 300 to 850 is the range. 800 and above is considered excellent. 740 when you work with mortgage folks is excellent. So anything really above 740 is fine. And honestly, most people that are going to be on this sort of podcast / investing thing all have either good or pristine credit scores, because you kind of have to earn your right to be an investor, is what I tell folks. So there's the credit history there. Kind of, that's one of the biggest thing is the when did you start your credit? Excuse me, and then how many years you've had credit. With the credit cards, you do want to just keep track of the one that you've had the open, because everybody gets in that phase, and I do it too, where it's like, why do I have 5 credit cards? And I just start cutting them up. It's like, okay, well, before you cut them up, you want to keep the one you've had the longest, right? Because that is what gives you that part of the score. Okay, let's see. Yep, a lender's decision. Where really the investor class going to face a credit thing is with buying either a house or a car, right? And most investors could pay cash for the car, but why pay cash for the car when you can get a 0.9 or 1.9 or a 3% rate, right? Might as well finance and pay it off over time. You're going to make more than that out of your investment total. So not just in the market, but house appreciation and all those other things. So you're going to make more than that 3% over time. So that's where I kind of say, if you have credit, if you have any loan out there that you're getting 3% or less, don't worry about paying it off. Who cares? You could go to 4% on your mortgage is where I say with mortgage debt out there. And I think we're going to have 4% mortgage rates or lower for at least 5 years. May bounce above it, but it'll keep coming back down, in my opinion. Okay, there's the factors it considers. We'll get into each of those here at the bottom, and go ahead and scroll up. It's the Fair Isaac Corporation is FICO, in case you didn't know that. That's good right there. Put that how credit scores work up at the top of the screen. You can see the range. Below 640, yep, subprime, yikes. That's what got us in trouble in the 2007-2009 timeframe. Is the mortgage standards dropped so much that they were letting subprime folks in. And honestly, I took I was in on it. I went in to get my mortgage for my house in Alaska. It was December 1st, 2015, and I walked in as an Air Force officer and took out $500,000 mortgage, and they didn't even need to see anything. Kind of crazy. It was the ninja, no income, no job application, one pager. Now you have to, basically give blood and a firstborn or something to be able to get a mortgage now. I mean, it's painful with all the documentation you have to put up, but it is what it is. All right, let's see, continue on down a little bit. All right, go ahead and keep scrolling down, put that credit score factors up at the top. Okay, so there's the 5 factors that go in. We talked about payment history or length of credit history. That's the number 3. Payment history is just making sure you don't miss a payment, which you never should. Interestingly enough, it's kind of a sidebar. It was Discover way back when I had closed an account and I had a $75 fee and I thought it was a nuisance fee and I didn't pay it off because it was principal. That was wrong. I actually took a credit hit for that. I did challenge it and eventually it's not on there anymore. I scrolled off, but I was interviewing in the White House for a job and I already had a pretty high clearance, well above top secret, but obviously to get this job in the White House, I needed the same clearance the president has because I've been working with him. And I go in for this clearance and it was a 4-hour interview, lie detector, the full 9 yards. And they asked me about that. And I was like, oh, that's pretty interesting. That would happen when I was like 23 and it's long off my credit scores. And they asked me several questions about that $75 charge. I thought that was interesting. It's how do they know? But they know. Okay, total amount owed. That is when you think of your, yeah, stopped out on our sale. Yep. The total amount owed is you think of your total credit line. So if you have 5 credit cards with your, 10,000 each, that's 50,000. So then it's your credit utilization. So if you have 30,000 sitting on a $50,000 credit line, then that would be 60%. That's bad. If you keep it down to 30% or less, which is that first paragraph there, it shows that, so if you have 50,000 in a line of credit, it doesn't really count against you as long as you only have 15,000 or so sitting on that card. The types of credit, they do want to see the actual credit cards actually get you more credit for having several credit cards and retail cards than your mortgage or car payments do. Those don't get you as much. And then new credit is the soft, right? The no dependency on income, it's just paying it off, right? The new credit is there's soft inquiries and hard inquiries. I was talking about something yesterday on the podcast about, remember, a soft inquiry is you going in and checking your own score. A hard inquiry is if a lender is actually checking your score. So just realize if you go to lendingtree.com and boom, hit, yeah, I'm interested, send me some info, that's going to be a hard inquiry. Same thing if you go in to buy a car and you say, well, depends on what rate I can get, they're going to do a hard inquiry and tell you, okay, here's your rate. And if you walk and don't get the car, that hard inquiry is still sitting on there. So as long as you get, I think it's 15 days or something, there's a window. So just remember to buy the car within that 15-day window or don't have them check your credit score, right? So, all right, that's kind of all I've got for you. Let's go back to the trading screen. We'll close out my trade, which again closed at minute 15. So we'll find 845 there at the bottom. So I was, excuse me, sorry about that. That's probably coming across loud in the microphone. I'm in the trade red, so that I am knocked out. So Predator wins again, kind of a theme. But I still don't mind that trade. I would be in that trade and I would let that trade stand all day. So we can revisit that tomorrow. I'll put that in my notes to see if it gets, I don't expect it gets down to 161. That would be 3R, but I do expect that it's probably going to close in the 180s or so. So now I wouldn't have any trouble holding that at all. Okay, let me do one last check on CNBC. So NASDAQ's in the green. The Dow's, S&P is almost even. You can see down 0.15 there, and then the Dow only down less than half a point. So there you go. Market money's flowing in. All right, let's check the chat real quick. I think I covered everything. So Predator, if you want to put your results in there from, I saw you said you got stopped out on RCL. Did you make anything today in your paper account? You can brag about it if you choose. All right, no open questions. We talked about the one. Yeah, I'll do that tomorrow as far as the niche ETFs. I'll look around for some interesting ones. And so we can talk about it. And then the topic tomorrow will actually be how ETFs buy and sell. So it's really kind of interesting how these things work. So, but we'll save that for the tomorrow. So with that, that's all I've got for today. Thanks again for joining in, and we will see you guys in the morning tomorrow.